Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar failed to stage any significant moves against the US dollar. Although the market was relatively bullish, it still was struggling towards the top side of the range, which currently holds around 75.80 to 76 cents. With the 60-day moving average, also note, is around 76.34 now, is the fact that any advantage should still fail. I believe the market is looking for a further test to the downside, looking towards 75.40 or even towards 74.75, with a broad uptrend, or should I say more support at 73.75. Reassess from that region if we do get down there. Interesting to see that the euro dollar has maintained its bullish stance over the last 24 hours is the fact that the US dollar index did post an intraday low of 93.67 before rebounding in New York and closed at 93.92. With the support still holding at 93.40, still questions whether the euro can rally in the short term, although the technical implications are bullish, with the RSI over the midway point of 50, stochastic also cut, along with the MACD breaking over the zero axis, could give further influence to the upside and look towards the region of 117.25 to 117.75 before the call to a reversal or even to sell into the rally. Later tonight, we do have the non-farm payrolls, unemployment rates, and average hourly earnings to come. The market will be paying a close attention to these numbers, so let's see how the euro plays out. The dollar yen hasn't made also any significant moves, and at this stage still hovering over the support of 108 figure 45. Since hitting this support of 45, the market hasn't staged any new lows, and currently at this point from the RSI could see a rally up towards 108.95 to 109.45, but we still need to see further momentum kick in. And if so, yen weakness with dollar play coming into strength is that we could see this move to the upside. The pound did take a brief look above the 133 handle last night and posted a high of 133.47 before slightly pulling back. I still feel from a technical point the market can post further gains, but it is a little disappointing that we didn't sustain above the 133 handle. Still, we're not that far away. We're trading around 87.88. We could still see a move towards the top side, but my target holding at this stage at 134.5. Dips towards 131.90, still a buy. We've seen another slight pullback for gold in the last 12 hours, and the market is still questioning whether it can break above this level seen at 1,306.7. I believe the market will because the geopolitical risks still loom out there and therefore could see a further rally. With dips still seen as a buy, I expect to see towards 96 to 88.91 to show around a demand. And I do expect to see further interest to the upside eventually emerge. And rounding off with oil, well, the market has posted a bearish flag. And if we break underneath this level, which now comes in at 66.2040, could see further risk to the downside. And the measured move comes in to $62.40.80. So I'm still a bear, and since this heavy tumble, market has failed to stage any recovery. So see how it plays out in the next 12 to 24 hours, as we still have the Baker Hughes report to come out and see how many rigs were added this week. So that wraps up for today. Thank you very much for joining me. As always, look out for the intraday reports, and I hope you enjoy the day and a wonderful start to the new weekend.